So good morning, everyone. We have a lot to discuss today, a lot to go through. It's great to see such a nice crowd, virtual, but quite a nice crowd. And I'm sure there'll be more folks joining us over the next few minutes. But maybe we'll go ahead and launch into talking about inclusive property insurance. There have been a couple of market research studies done in Kenya. This is a topic that's, I'm guessing, not super familiar to all of you. Maybe some of you have worked on it, but it is a rather specific and narrow topic, and yet it is quite important. So I'm Daniel Rosas from European Microfinance Platform. I'll be moderating the session, and we have a really wonderful group of speakers today, and I would like to start with Sitara Merchant, who is the head of the Swiss Capacity Building Facility. So Sitara, welcome. Good morning. And I'm going to kick this off. We didn't do sort of long introductions of your background, but I think because we don't have much time, but I will go ahead and hand this over to you, and please go ahead.
Thank you, Daniel, and welcome everyone. Good morning, good afternoon, good evening, whatever the time of the day is in your part of the world, and as you're joining. I wanted to share with you that, who Swiss Capacity Building Facility is. We're a public-private platform that funds technical assistance that financial sector partners need to develop innovative, client-centric financial products and services like property insurance, the topic of today's webinar. But I'd like to start telling you a real-life story that I lived through, and I don't think it's my own, it's a unique story. I think it's a story that many people have also experienced. Excuse me. Growing up in Tanzania, a dear friend of mine, her father poured his life savings and most of his waking hours in building a business. And in one night, that business caught ablaze. And because at the time, fire brigades in Tanzania took forever to arrive, the business was burnt to the ground, and it was cinders. A few days later, her father had a heart attack from all the stress and was in hospital. With no business or property insurance and no health insurance, the family experienced a lot of hardship, to say the least. You'd be happy to know that the story ends well. Today, the family has managed to recover. So now, 30 years plus, if we look at what progress has been made on insurance, particularly in light of the accelerating climate events, we find, according to Munich Re, the natural catastrophe protection gap, that gap is uninsured losses as a share of total losses, has narrowed. So the good news is that globally it has narrowed from 78% to 70% over the last 30 years. So everybody kind of goes, yeah, this is great. But actually, when you look deeper and you look into it, most of this progress has been made in high and upper middle income countries. The protection gap for lower and middle income countries persists at over 95%. So if that same situation were to happen today, it's very likely that that family would not have had access to insurance or to other types of insurance. But if we look more focused, let's take Africa, and we look at property insurance in Africa, the topic of this webinar. In Africa, 4.5 million people in 2015 had property insurance, compared to 46.4 million that are covered with life insurance. And so all that to say, it's projects like the ones that SCBF funds in developing innovative financial products and services. And SCBF is really pleased to both fund these projects and to support and host webinars like this on property insurance. Today, the webinar, we will unpack the relevance of and the need for property insurance for boosting financial inclusion, and hear from two Kenyan insurers about their initial research into their experiences in serving emerging consumers with inclusive property insurance. On that note, I'll hand it back to you, Daniel, and take it away. I hope you really enjoy the webinar, everyone.
Thank you, Sitara. That was a wonderful way to open this, and thank you for sharing this really nice story of the client experience. Lisa, would you mind sharing some of the work that ILO has done in the space and help move the panel along?
Yeah, sure. Thank you very much, Daniel. I would like to actually, I've got a couple of slides that I prepared for you, so hopefully you can see them. Thumbs up, yeah? Can you see the slides? Okay, great. So yeah, thank you, Sitara, for introducing the session and sharing that story. I think fire is one of those things that people don't necessarily think about, you know, and actually, when I think about it, there are a couple of people that I know that have been affected by fire. But I think let's just go back a little bit because, you know, I've been working in inclusive insurance for many, many years, since 2008. And it's always been about health and agricultural insurance and climate change. And very little attention is given to property. So I want to start out with just kind of checking that we're all on the same page, that everybody knows what we're talking about when we talk about property insurance. So here we're looking at insurance that provides against loss or damage to real estate and personal property, which is caused by perils such as fire, theft, windstorm, hail, vandalism, etc. And as I was saying, you know, when you look at the inclusive insurance space, property insurance is quite absent in low-income and emerging consumer target markets. So if you look at low-income renters, property owners, those who are building their own homes incrementally, and micro, small, and medium enterprises, not many people, not many small businesses are actually using inclusive property insurance, and we do know that these risks exist. I think there's the usual issues of you know, with inclusive insurance, specifically with property, limited supply, limited understanding. And I did a little bit of research into you know, globally, and also with inclusive insurance, what has actually been written out there. So the landscape of microinsurance 2021 covered, there's information in there on property insurance. But then in terms of even just mainstream conventional property insurance, you know, things are quite difficult at the moment, I think, for this particular product. We've had COVID-19 in Europe. We've had we have the war in Ukraine. This is in turn has fueled this economic slowdown. We're in an environment of high inflation, and so property and motor insurance, according to Swiss Re, will be the most immediately affected in the short term. However, this is a long term. Our view of property insurance and why we want to focus on it is more long term. But just to say, in the short term, things might be a bit difficult, and I think that will come out in some of the research. So just a couple of insights that I wanted to share with you. So property insurance in all regions, and when I say all regions, this is the microinsurance network study. They did a study of Africa, Asia, Latin America, and the Caribbean, and they had specific insurers that contributed to the study. But on these two graphs, you can see that property insurance, which I've highlighted in yellow, hopefully you can see this, is really, you know, it's not one of the bigger products, and it's only used by a fraction of people when you compare it to health and funeral and life and these other products. We also see that property insurance has particularly low claims ratios. And I'm not sure what's driving this, but it could be a possible indication of low awareness where people do have it. I also noted that, you know, when it comes to women, we have a way to go before we reach parity. So if you look at, again, this is from the landscape study. So just over a third of policyholders are women, and of those who are covered, 44% are women. So again, this could be, you know, it didn't go into detail as to why these numbers are the way they are, but we know that women sometimes do not have property in their own name, and so there probably are sort of gender norms in the countries that we studied that that have resulted in the statistic of it not being parity. So I think there's a bit of way to go with property insurance and women. Actually, sorry, forgive me. I just focused on Africa because our two speakers are from Kenya. So so talking about property insurance in Kenya, I've been working with Sarita and Lisa, and they will tell you more about the project they're doing. But back in 2021, we started looking at the Kenyan market, and I think it's interesting just to share a few facts with you. So as with the graphs that I just showed you, life, credit life, and hospital cash products were dominating and still do dominate the Kenyan microinsurance market. There is, however, clear opportunity with MSMEs because many people run their businesses from home and often don't have formal protection against property risks. At the time we did this research, there were 16 companies that were registered to offer microinsurance, and that's any type of microinsurance. But most property insurance products were categorized as SME insurance, and only 7 of those insurers were offering these products. Again, just to say a tiny bit, we've been absolutely delighted and honored to be working with a couple of partners. So property insurance is something that is definitely on our radar. Since 2020, we've been working with Habitat for Humanity, which is a global non-profit housing organization and our development partner. And you'll hear more from Daniel Miner a little bit later. And another partner is Britain, and the financial services group. So we've been working on a project called Developing New Property Insurance Solutions. We recruited our wonderful fellow, Sarita Mahanti, who joined in January 2021 and has specifically been working on this project. The purpose of which is to stimulate product innovation and support development of new property insurance solutions for low-income and underserved market segments in Kenya. In June 2021, we joined forces with SCBF, and we will continue this project until the end of next year. But the initiatives that we've started, obviously, we hope that they will continue well into the future and support the growth in property, inclusive property insurance. So, Daniel, I will hand it back to you. Thank you very much.
Thanks very much, Lisa. This is a great way to open for you and Sitara to open up the webinar. So let's maybe go ahead and dive into the studies and the findings that have been done in Kenya. So I'm happy that we're able to have the experience of Sarita Mohanty, who is the ILO Insurance Fellow, and also Lisa Maro, who is the Head of Innovation in Innovation and Emerging Consumers of Britam, Kenya. You guys have your ears close to the ground. And Sitara opened up her presentation with this story from a client. If you can also share client stories as you share your actual experience from the research, that'd be really great. So please take it away, Sarita.
Thank you, Daniel. Thank you so much, and welcome everyone for this exciting discussion that we are going to have. A story from my experience. Recently, a couple of months back, we were on a sensitization drive, which was meant for Fisher Folk Association members in some parts of a county here in Kenya. We went and we did our work in terms of explaining what we are trying to do in terms of some insurance solution. Property was also part of that solution we were working on. We explained it to some of these members of the association who are fishermen who do fishing. They own boats and all. So we explained and we were done with our session, and then we were kind of responding to the queries, answers to the various inquisitive questions that they had. In the meantime, what happened, couple of women, if I may specifically say women members, not members exactly, these are vendors who were outside of the hall where we were conducting this drive. And they basically, what they do is they fry fresh fishes and sell it on the beach to various people who come there. So they kind of approached one of our colleagues to understand what exactly is going on, and trying to understand why there are so many people together and who are we who are trying to explain them something. And then upon explanation to them, and we explained that we are trying to come up with some insurance solution, we want their feedback as well, and we kind of answered many of their queries as well. Interestingly, two of the members of around 4-5 women who had gathered there, they were ready to take whatever solution we were proposing then and there itself. So if I may say, this is nothing of a revelation, this is nothing new, but the fact or the re-emphasis on the point that awareness and education will help this segment. It's not that they don't want insurance, it's just that they need to be aware that there are insurance products available for them, and they are affordable as well. And they can, once they are aware and educated about the products, they can take conscious decision whether to take them or not. So that was a learning for me, and it was an interesting session or interaction with them, I must say. Well, with that, I would like to start our presentation, which is on findings of the various studies that we have done. But before I get into the various studies we have done from Jan 2021 onwards, I would like to share that there was a study done in 2015, which is the premise of this particular project that we are doing, which was done by Habitat for Humanity and SCBF and some other partners. That particular study highlighted that Kenyans do face a significant amount of risk pertaining to their properties, like fire, theft, floods, etc. But they typically underestimate the impact, hence probably they never prioritize a risk management solution for these kind of risks. Many of the respondents in this particular study also highlighted or mentioned that they probably don't need insurance to protect their home assets or home contents. However, a certain percentage of these respondents who own small businesses mentioned that they would be willing to explore ways in for protecting their business assets, the premises where they run their businesses from, stocks, basically their income generating assets, because that is the source of livelihood for them. The study also suggested or recommended some of the product and marketing concepts that we did look into when we started our project. And it also suggested some feasible distribution partners or channels that we should explore. In Jan 2021, when we started the project, Britam also helped in doing a ground level research. It was in the form of a focus group study, given the ongoing COVID situation at that point in time. The FGDs were done with some small business owners across places in Kenya. And the main risk this group identified in terms of what their properties face on a day-to-day basis, the risk that they face were theft, fire, goods getting damaged, power surges, making machineries not working because of the power surges, perishability of their food items if they are dealing with food business. So they did highlight all these risks. They also mentioned that some of them use CCTV cameras or security guards as a way of protecting their business against some of the risks, if not all of them. When we asked about the awareness about property insurance or property micro insurance in general, there was very low awareness in this particular segment. They somehow had a perception that property insurance is meant for bigger organizations, bigger companies, and it is very expensive, so it's not meant for them. However, a portion or a part of these particular respondents were also willing to understand or know what exactly is that, how this property insurance solution can protect their businesses as well. So which was a good point to explore on. Another study was done by AB Consultants with an NGO in East Africa, and their clients comprise of micro entrepreneurs or again small businesses to whom the NGO lends money. And the findings of the study again were interesting. The various unexpected events that these respondents mentioned they face overall, not only related to property or business, but overall they face were sickness, death, accidents, fire, theft, etc. in this particular sequence. And in terms of frequency, sickness came at the top of the various risks that they face, followed by business loss and theft. Whereas in terms of severity of the impact, sickness again came at the top, but was followed by death and accident. So probably the frequency of property-related incidences were high, but in terms of impact, they did not perceive them to be too high. In terms of their perception about insurance, few of them, or almost 53% of them, were aware about insurance in some form. That is, in Kenya, there is a national health insurance fund, which provides medical cover, which is kind of a government setup which provides them. So they are aware of insurance through these covers, through the various awareness campaigns that are done for them. Again, a portion of this particular respondents were willing to understand, learn more how insurance can help them, in safeguarding their businesses, and were willing to know more about it so that they can take decisions going forward related to insurance for their business. Next study we did was with a B2B e-commerce platform, which helps informal retailers across Kenya to place their stock orders for FMCG goods on their website. And this partner helped us to do this study amongst these informal retailers spread across 5 locations in Kenya. Here again, similar to the previous study, in terms of frequency, the group identified that sickness of self and even family members is at the top when they talk about risks they deal with on a day-to-day basis. Almost 93% mentioned that. These, in terms of frequency, again, other risks that follow are theft, weather-related damages like excessive rainfall, and death. In terms of severity, again, sickness of self and family came at the top, again, highlighted by 95% of them. But it also did follow with excessive rainfall damages or theft to their businesses. Many of these people, again, in terms of when talked about or spoken about their awareness regarding insurance, they also, few of them or a certain portion of them were aware about insurance in the form of the NHIF medical cover. Either they have it or any of their relatives or friends and family have it. So they are aware of it. So when asked if they would be willing to consider taking insurance overall to, which might address all the risks that they have highlighted, 31% said yes. And yet 61% said maybe, because they wanted to understand how insurance works first. They wanted to understand if the solutions that are available in the market or are being designed for them, will they be affordable to them? And if at all, how fast the claims or the benefits they will get in case an event occurs. Because these 3 criteria they wanted to understand first, and then they said they will be able to decide whether they want to go for an insurance solution or not. Lastly, we did a study with a bank and its customers. And this study was basically a product concept testing we tried to do with this bank. And we shared 2 product concepts, a brief structure of them, a loan-linked property insurance solution and a standalone property solution. Loan-linked being addressed to people, having small businesses to whom the bank gives loans, and standalone was meant for any customer of the bank who would like to give property insurance a try. A simpler solution was designed. We got some good feedback in terms of the features that we had designed. One of the features which was broadly appreciated was a business interruption, because that is not a feature which is generally designed for this particular segment of the client till now. And there were also suggestions about how we can better off the product offering, what are the lacunas in the product, and that helped us refine the product going forward. In terms of, again, talking about awareness, most of them were aware about insurance, because again, most of the loans, if they would have taken, that might have credit life attached to them. In all likelihood, almost all the loans have it, or in some other form like medical cover, or some people were even had an exposure of having a chattel insurance, which is a form of property insurance which provides protection or insurance for movable goods which they might have kept with the financial institution as collateral. So they were fairly aware about it. Still, they mentioned that property insurance as a concept is difficult for them to understand, to kind of, it's complex, and there are too many terms and conditions. So the feedback from there was that we have to simplify all these things again to make this segment, make the products more accessible for this particular segment. And one more major concern they highlighted was that the product should not get embedded, because usually what happens is credit life is already part of the loans that they take from the financial institutions. Sometimes some other products are also mandatorily embedded, which makes the product itself expensive for them. So hence they were not very keen about embedding them. But the idea again here is probably if we can make them aware and educate, they would be able to take a decision themselves whether they would like to go for a product or not. Some additional insights also we gathered from these researches and other researches and discussion with various members and partners or players in the industry that we did, that majority of people in Kenya, they do not own their own houses and they stay in rented premises. So the willingness for covering these rented properties under an insurance is not there. Again, if we talk about the low income segment, they do stay in rented premises, plus they have a tendency to move up from place to place every couple of years. So probably they do not again prioritize insurance for their places where they stay, or the contents that they have, because they do not value them as much. So they do not think that much about it. Micro entrepreneurs or small businesses, as I said, they take measures such as security guards or CCTV cameras. Some put grills in front of their shops to protect against some of the risks that they face on a regular basis. Some business risks which were highlighted, like perishability of foodstuff, employee resignation, machinery damages caused by power surges, or business loss caused by power outages, are genuine risks for these businesses. But unfortunately, at this point in time, there are no direct solutions, insurance solutions, which provides protection against these risks. So we need to work more in these areas to be able to come up with a relevant solution. Similarly, eviction of informal settlements or people staying in slum areas, that's a constant or a recurring problem that they go through. Yet we do not have a solution as of now. There are genuine reasons, again, lack of data, like establishing the genuineness, everything else is there. So we need to work on these areas to come up with some better solutions so that our genuine need of the customer segment can be addressed. So these are some of the learnings and insights that we got from the various studies. Now I would like to ask my colleague Lisa to take over the next part of the presentation. Thank you.
Okay, thank you, Sarita. So maybe we could just move on to the next slide. So in our agenda to be able to create a more human-centric product, we tried to map out the risks that we identified in the solution, in the research, against what was actually being said by the clients, trying to map it to what could be insured and what could not be insured. Sarita, maybe next slide.
Sorry, just a second. The slides were not moving, so give me a moment. Yeah. Is it visible now?
Yes, can just place it on slideshow. Thank you. Yes, so what we did identify was that for most of the risks that were being identified by the clients, most of them were insurable. So what challenge we had on our end was to actually try and package these solutions such that it be easier and accessible to the clients. And this is what guided our interventions. But before we get to the interventions, we look at the challenges that we did experience in trying to roll out the product. The first challenge was on Sarita.
Sorry, there's some, yeah, sorry, my bad.
The first challenge we saw was that we there's very minimal disposable income in this segment. So most of the small businesses and the micro enterprises were really affected during the COVID period. And we're seeing this is a continued effect through all the way till 2022. So when we're trying to sell this product to them, it's quite difficult for them to actually prioritize it compared to any other solution that they would be looking for. The impact of property loss is still very high. So despite them actually underestimating that specific risk, we're seeing that the alternative coping mechanism using security guards or using fences is not sufficient to actually be able to cover the losses that they would experience in case of a theft or a fire. There's also very low awareness and negative perception towards insurance in Kenya. As based on the FinAccess study, we're seeing that very few people know about insurance, let alone are able to afford it. So this negative perception in the industry was very hard for us to be able to distribute this specific product. Then finally, despite us trying to use digital platforms, so for instance, the e-commerce platform as well as the banks, we still have to go to the ground and actually sell this specific product. Each retailer having no awareness of the product, having very little income to be able to buy this product, we had to actually explain the products as well as distribute and onboard the client. So there's very high expenses in being able to distribute this product. I think from a client perspective, the property solution has specific terms and conditions which were not really let me just say friendly. Reason being, those who actually need it can't have the products. We've seen cases of the Komba Market on Fire, which is an open air marketplace in Nairobi, and they are prone to have very numerous fires, but they remain an exclusion in the property insurance covers. So this has been a challenge in being able to distribute this product. Property insurance is also not a priority within this segment. So we're finding that medical insurance as well as motor insurance will always be the top of mind for any small business compared to property insurance. Since number one, they're underestimating the risk, as well as to the fact that it is not something which they consider to be a priority in the area. Then finally, as Sarita had explained, what we were seeing is that the conversion rate for anything that was being bought as a retail product, that is insurance, retail property product, was very low. So we'd have to put so much marketing, awareness, communication, but still the uptake is quite low, both even through the aggregators as well as when we are selling it to retail through any other distribution partner. So these challenges actually guided us to have some interventions. And the interventions that we identified were in 4 phases. So number one, creating or identifying insurable moments. By insurable moments, you are seeing those moments where a small business would actually say they would need insurance. So when they're transiting some goods, maybe from their wholesaler to their shop, or if even them themselves are trying to move property within 2 different towns. So we created pay-as-you-go covers, which is a transit insurance product, which would cover both the loss of belongings as well as the stock, or if there's any loss or damage to their stock. Other interventions were partnerships and aggregators. So the aggregators were really key in number one, being able to raise awareness within the group and to have them educate the market. So as Sarita explained, using the associations, you're able to find similar individuals with the same risks, and we can educate and distribute the same product through them. The third one was product bundling. So product bundling was to actually try and give a taste of property insurance to the different clientele, especially the SME businesses. So you'd find we'd have many clients in health insurance, last expense, as well as personal accident covers, but there's very minimal interest in property insurance. So to be able to bridge that gap, we had a bite-sized version of property insurance being embedded in what we had, and this gives them a test, and we're able to demonstrate some claims payouts as well as increased trust in both the property insurance covers as well as the other products that we're selling. Then finally, we had two solutions, that was the standalone as well as a loan-linked product. But what we are seeing is that we can't have a one-size-fits-all approach in actually structuring the property insurance product. So each time we go to the market, when we're identifying any potential client, we're able to collaborate and go back to the drawing board to co-create the product together so that it remains sustainable and relevant to the different groups that we are working with. So in conclusion, I think to our presentation, what we are seeing is that this journey is evolving for inclusive property insurance. Whatever product we started with at the beginning remains changing depending on both the clients that we're working with as well as the partnerships that we're getting into. So we always have to go back to the drawing board to, number one, empathize with the client, understand what exactly the risks is, to define the problem that we're actually trying to solve with that property solution, ideate a proposal, go back to the market, test it, and each time we always revert to be able to see whether that solution is working for them. So based on these insights, I think there's a lot of learnings that we have to be able to, of course, use human-centered design to be able to roll out and scale up this insurance property. Thank you. Back to you, David.
Thank you, Lisa. Thank you, Sarita. That was really, really insightful. And it's great to see, the findings that you're hearing from the research. I wanted to. We have actually one question that was posed by Anya Kostermani. And she was asking, how do you think the challenge of reaching informal MSMEs as policyholders can be tackled? So really focusing on the informal markets. And I think you were talking a little bit about the fires that often affect these informal markets. So any thoughts on how you tackle them specifically?
Yes, Daniel. So some experience as of now that we are seeing is, given that this micro segment, when we talk about, it's a very scattered, all these business owners are very scattered. So, reaching out to them on a retail basis or individual basis is not very easy because they generally are not part of any associations or industry bodies and all. So for them, I think the way to approach them is through MFIs and banks, through with whom they have some sort of transaction partnership. But when we talk about SMEs also, like one of the ways could be, most of these SMEs, when we talk about, I'm leaving aside the micro part, they are generally part of some industry association. So maybe interaction with these industry associations will help reaching out to them. Second, one important aspect that we have to focus is we have to do segmentational approach in terms of, there are manufacturing associations, there are, say, other trading companies dealing with different businesses. And each business or each segment will have their own set of risks. So again, as Lisa was mentioning, we cannot really do a one-size-fits-all kind of a solution. So it's better to interact with these industry bodies dealing with a particular segment of these MSME members, and then try and understand their risk and customize a solution for them, which we are still working on to do. It's not easy, but yeah, I think that is a good approach to take for now. Anything Lisa might want to add?
Yeah, I think she's covered it all, but also one thing we've seen is there are emerging businesses that connect the retailers to the wholesalers, and that's a great way to actually approach the small businesses. So find the aggregators and we embed a solution for the small businesses.
Okay, great, thank you. We have quite a few questions. We're not going to get to all of them now because we still have more presentations. But there was one from John Robert, who I believe was mentioned. He's based in Uganda. The question he is asking, how do you manage moral hazard? So I think, especially when you get into property insurance, obviously the person whose property it is knows more about it and the risk that it's facing than an insurer does. Any thoughts on your experience on this?
just a practical experience, the approach that we took in this project that we are doing, given that property insurance, micro insurance or inclusive property insurance is still at a very initial stages. So having too many risk management measures without even getting to understand the segment won't make sense. So the approach that we have tried to take is passing on a bit of benefit or trust to the customer, and start with going by whatever they are saying, not to do a claims assessment in each of the cases, but go along with the experience. So once we have a substantial experience, we can put in the measures to control like moral hazards and other risks that they face. But we do not want to put them right now, because that will deter this particular segment even to experience the products. So as of now, we are trying to do that, and as and when our experience comes along, we'll be able to share more learnings from there. Thank you.
Right, makes sense. You deal with moral hazard once you have clients. First you start there. Okay, thank you, Sarita. Thank you, Lisa. Like I said, there are more questions, and we will get back to them after we still have a couple more presentations. I would like to encourage our audience, do share your questions. Before we move to the next presenter, we have a couple of poll questions to learn more about you, the audience, and your familiarity with insurance and property insurance specifically. So can we launch the poll questions, please? All right, so you should see that on your screen. So I'll give you a minute or so, maybe half a minute.
Just to say there are 3 questions, so hopefully you should see them all in one go.
Right. Make sure to scroll if you don't see them all. All right, so I don't know if I can't see how many have answered already.
Okay, I can tell you it's we have 40% going up, 47%.
All right, let's get to 50 and then
Okay, so gosh, we have a great group of people who are really listening in. So I mean, yeah, 64%. Shall we stop it there?
I think yes. Let's
Okay. All right, so I'm going to share the results, so you should see them, Daniel.
Absolutely. Lisa, maybe you want to join us on screen as well.
Right. Okay.
All right. So we have quite a lot of the insurers or those in insurance technology, right? We have some consultants and a kind of a group of others. Does that sound? It's quite a broad distribution. Lisa, I don't know if you have some thoughts on this. I don't know if I'm, and mostly from Africa, which makes sense since we're talking about Kenya.
Yeah. It's a good mix of people from around the globe and across the industry.
Yep.
And it's great to see that 36% actually offer inclusive insurance for property, which is great.
It sounds to me that we should just let the audience take over and have them present all of their experience, since there's lots out there. This is fantastic. So we will definitely dive into your questions, since you'll clearly have lots of interesting questions. Fantastic. So thanks, Lisa. And let's move on. And our next presenter is Helen Osor, from Head of Inclusive Insurance at Apollo Group, which is, if I understand right, a part of APA Insurance in Kenya. Helen, do you want to share some of your experience in Kenya with a study that you recently did?
Thank you very much, Daniel. Good afternoon, good morning, different locations. Allow me to share my screen. Okay, I think I would want to start by giving context of our economy in terms of how the consumer segments in Kenya is structured. It's a mirror of the African consumer, with basic survivors being the largest consumer group. And what we observe about this particular segment that I wish to focus on is that they are low-income earners, they earn daily, their cash flow is unpredictable. And so we are, long and short of it, for Kenya, we say we are a bite-sized economy, meaning if you want to play and have impact, you have to find a way of ensuring whatever solutions you're offering, despite the sector, is actually bite-sized. And in this particular webinar, I want to showcase two other sectors that are not insurance, just to demonstrate what is happening, and then I will align it to insurance. We all know about our Safaricom that has about 28.2 million customers. Safaricom has airtime that is less than $1. Okay, you can purchase airtime less than $1. Mshwari is a loan product, and you can also borrow at least $1 or less. That's about 100 shillings in terms of a loan. So the big question is, how do we as an insurance company align to this market? Reason being, their income is constrained, so to speak. They make their day-to-day decisions, and their purchasing power is what you'd call, allow me to borrow from Britta, a micro moment. So the question is, within the insurance space, even as we discuss the micro property, how do we move away from the conventional and align ourselves to their wallet share? And so this informs the research, why we did it, because at APA, we are already offering the micro property cover, and the issue was scale. We do have a baseline of about 90,000 active policyholders, but the big question is, how do we scale to impact and benefit more people? We are looking at active 300,000 policyholders in 2 years, and about 2.7 million in about 5 years. So we sought to establish and assess the risks that threaten the operations, the level of awareness and penetration, and the other most important thing is, do we need to redesign? Questions were also around barriers that needs to be established, and also establish whether the distribution channels have an impact. If I'm to take you back to the Kenyan context of bite size, we observe that our Safaricom is both high-tech and high-touch. There is a big discussion around tools. What does the consumer have? What are their transaction platforms? And so our research objectives, one of the key ones is distribution, and we'll be sharing our findings on that. So moving forward, that's just a snapshot. And what I want to focus on are two things. The research locations were both urban, peri-urban, and rural. And the sub-sectors within the market, we looked at the mechanics, the metal workers, eateries, clothing and textiles, agriculture, and the service industries. Here we are talking about the salons, etc. So the point and the approach we took was to actually engage the consumer of this micro property and establish the research objectives that I've highlighted. So in terms of risks faced by MSMEs, we've highlighted the top 10, and we can see from injury at work, lack of capital, loss of customers, and we move to our subject, which is theft of property and fire. What was interesting here was the frequency versus impact. And we can see in terms of impact, where impact here, we are referring to the financial loss when the risk crystallizes. We see that fire and theft had the highest. Kindly note that this is not frequent, but whenever it happens, the impact is significant. And so the other big question was, so how do they go about coping, their risk coping mechanisms? They use their own savings, some reduce their stock, but the interesting one here was borrowing, okay? borrowing from banks, from Shylocks, from their chamas. They needed to borrow. Now, what hit us on this one is the reality of the enterprise and the life of the MSME seems to be one and the same thing. Clearly, when you look at the coping mechanisms, it's obvious there's some effort to survive. We are looking at survival here. Why? Because the business and the person is one and the same thing. Now, if you interrogate this slide further, then you can clearly tell where they transact from, okay? Meaning we need to find our way to where they go. And so the lenders become strategic partners that we need to work with just to assist the same MSMEs in terms of coping. Now, the specific question also is, what about insurance? Clearly, from what they've said, we can see there is a business case. Now, this is what they had to say in terms of the challenges they faced regarding insurance. One, they do not have information, and that was 43%. Insurance is expensive. I don't see the need to insure my business. I don't have enough money, no appropriate insurance products. Insurance companies do not pay claims. Insurance is meant for big business. If you begin to merge these challenges, one of the things that comes out very clearly is the knowledge gap, okay? 43%, I don't have information, or I think insurance is expensive. That could be perception. They could be right, they could be wrong. And then when you say no appropriate insurance products, courtesy, how do they know whether the product exists or not? So when we merged the challenges, we could see that the knowledge gap is one of the biggest challenges that needs to be addressed. The second thing that also comes out clearly is affordability. Now, remember, our research focused on the MSMEs that sit under the basic survivors. So the question is, from these challenges, what do we see? What are we hearing? What would be the next steps in terms of product designing, awareness creation, distribution, and note, especially on the insurance companies do not pay claims. This was disturbing because we as partners, we will argue and defend ourselves and say we do pay claims. But the issue is, are claims paid on time? As far as this segment is concerned, when there's delay, the impact is almost equals to it was not paid, because like we saw earlier, when the risk crystallizes, it leads to them turning to borrowing. So the effect of that means we need to do something. We need to design to pay claims and pay claims fast. So in summary, what were some of the research insights that we got? The first and quick one is affordability. Product redesign must be affordable, must be simple. Those exclusion clauses need to be relooked. We need to focus more also on and also accommodate, I think Lisa and Sarita brought out that very well. We need to find a way of embedding some of the benefits to the property cover. E.g., we all know illness is a frequent risk that can have a rider on the property cover. There needs to be improved perceived value with lower sum assured. For some reason, we tend to sell higher benefits. A lot of times that's what we do as insurance companies, but these people want to see, you sought me at my level. And this also alludes to what I call believability in the benefit that is offered. There's a place for what we call combo, combining solutions, multi-risk MSME, as opposed to singular benefits. There's also need, as far as Kenya is concerned, to review the distribution channel, like I mentioned earlier. Kenya is a heavily digital economy. In as much as we'll have challenges with affordability, everybody or majority of the population have a phone. So there's need to ensure that we can reach and offer solutions also on the digital platform. Awareness is a big thing, and as I end my presentation, I'll be talking about how we're going about it. And the offerings, like we've said, this to be an agile product that can accommodate different affordabilities and also appetites, so to speak. And last but not least, efficient claims process. It's about the experience. And so in terms of customer segments, I think that was touched, and I would believe at that point. And so lastly is just to say, what is our takeaway? The approach must change, and how you create awareness also must change. As far as one of the things we've learned is the microinsurance market is a peer market. It must be endorsed. There must be who's referring you. And so before you get to the point of making a sale, how do you create awareness? We also know that people have their reservations and suspicions about insurance. And so one of the things we've been doing is working closely with AB consultants. There's this Resilient Me game. There's a long and short of how the game is structured is more like Monopoly. And what it does, it exposes the participants to real life experiences and makes assumptions of a typical month that will have its highs and its lows. What we have witnessed is introducing insurance through this game makes it easier and makes it real. In fact, when we are done with the presentation, with playing the game with the participants, one of the things that comes out is, give me this micro-property insurance. And why micro-property insurance? Like I alluded earlier, it's because the business and the individual are one and the same thing. Thank you very much. Back to you, Daniel.
Thank you very much, Helen. That was great. We have a ton of questions, and that's fantastic to see. So I'm gonna move very quickly, and we have just before we jump into the questions, I wanted to maybe pose a couple to you, Helen, and I think one might actually be perfectly suited. So Dorcas Malumba was asking about the financial performance of property insurance specifically. You know, from APA's perspective, do you have like comparing to other product lines, do you have something to share on property insurance specifically in terms of their financial performance?
Yes. First, I want to confirm that there is a business case because of our reality. Say, for example, for the Kenyan market, and the fact that APA, as we speak, is at 90,000, and we are optimistic, and we are going for about 300,000 in 2 years. And what I mentioned, 2.7 million, it means there's a business case. But the big question is, how do we get there? I noticed one of the questions was also around moral hazard. How do we mitigate against that? We need to have appreciation of how that market is structured. Sarita did mention that if you do retail for retail, one, it's not sustainable. It is not affordable, it's going to be expensive. So one thing that we need is economies of scale. And how we've achieved that is by working with partners who support this particular MSMEs. The question, I think, to all of us is, who has your client, okay? Who has your client? And the person who has our clients are these MFIs. Why? Because they do what we don't do, which is support the activity in terms of what is this, the stock, etc. That's where they are. That's number one. Number two is appreciation of what these partners do. They have what we don't have, and that is trust. One of the gaps that we find, and we all know about insurance, is trust, relevance, and reach. Already these partners have that for us. And the last thing I want to also comment is, when you're looking at the partnerships, we need to appreciate that they are careful not to increase their costs. Now, right there is a platform for bundling, bargain, negotiate. How do I bundle? Because in bundling, there are clients who are exposed and there are clients who are not exposed. And that's the spread, the risk mitigation technically is taken care of, such that if there are markets that have a concentration and potential losses when there's higher, then it's mitigated. It's mitigated with the bundling. So we feel there's a strong business case. However, one of the challenges is moderating what that cost will be like so that the institution remains competitive. I hope I've answered your question, Daniel.
Thank you, Helen. I hope that's what Dorcas was looking for. But Dorcas, if you have some follow-ups, please feel free to share. Maybe one more question for you, Helen. And this one is from Roland Steinman. What are the key terms and conditions of your current property policies for MSMEs? And what does the claims process look like?
Thank you, Daniel. As I mentioned earlier, I said you must design to pay claims. You know what is interesting about most of our products? They're not designed to pay claims. They're designed to exclude paying claims. So what we've done as APA, we've avoided controversial areas. And at this juncture, also allow me to mention that our regulator has created a framework of defining what micro will be. And this is because of the appreciation of who they are, the challenges they face, and how fast we need to pay the claims. So the first thing which I want to highlight is simplicity. And what we've done, and this I must mention, our product is designed for assistance, not indemnity. Okay, not indemnity. The issue is how fast can you get the MSME to rebuild, okay, to start all over again, almost immediately. So in terms of simplicity, affordability, you can clearly see we've pruned away a lot of things so that the customer can have a head start. Now, when it comes to the process, we are talking about three things. We are looking at onboarding, premium payment, and the point I've belabored on claim settlement. So let me talk about these other two. So what we've done, we've appreciated their reality and the simplicity of their structures. We know most of them don't have the proper property cover in terms of what is it, a stone building. Some of them have what you call polythene, okay, polythene, iron sheets. That's their world. And so what we've done, and why I say the place of partnerships is critical, we argue that if the partner is confident to lend, okay, if the partner is confident to lend, then they've done their KYC. And one of the things we appreciate is that they grow. So we plug, it's called what? We plug into their trust, okay? And remember, maybe what we will compensate is way cheaper than the loan facility. And so we work with that. So in terms of premium collection, here the big word I want to say is we definitely select partnerships that have premium collection capabilities. And this is just to ensure the process is seamless and not disruptive. I think I talked about the claim.
Yes.
Yeah.
Thank you, Helen. This is great. Very helpful. So do stick around. We have a lot more questions, but I want to hand off for a few minutes to Daniel Mina, who is Associate Director of Housing Finance at in the Africa region. And he works at Habitat for Humanity International, that obviously as an organization focused on housing, has a lot of thoughts on insurance. And so Daniel, what are your thoughts on what the speakers have shared from the research in Kenya so far?
Yeah, so thanks, Dan. As Habitat, our vision really is to ensure that everyone has a decent place to live, and hence we understand the challenges that low-income households really go through to owning a house. But most importantly, the negative impact that comes with them losing those assets. And hence, we really are excited to partner SCBF, ILO, Britam, to come up with these innovative solutions. Pretty much because of four areas. And basically this summarizes the discussions that have been ongoing. One is because we are addressing the needs of the low-income households towards having the appropriate product for them, but also things like capacity building so that they understand the importance of this risk products. But also the approach or the process that we are going through in terms of as you had from the moment we started with research to really understand the local context and the needs of the low-income households, but also using different methodologies like a human-centric design to really come up with the right product for these people. But also the lessons that we are picking up through this process. So far, we have a lot. I believe we will share at some point in the future in terms of what are these lessons that we've picked as we go through the process of the product design. But lastly, the impact that we will bring, not just in Kenya, but when we move towards scaling in other markets. And hence, we are excited and we're looking forward for this intervention to continue as we pilot and scale in Kenya and perhaps in other markets. So over to you, Daniel. Thanks.
Great. Thank you, Daniel. This was good feedback, and do stick around, I think, for some of the questions, particularly talking about bundling and relevance to housing. I think you might have some thoughts to share, but we have a lot of questions here, and I want to make sure we get to as many of them as we can, and do keep them coming. So I wanted to, Brian, I'm gonna mispronounce your name. So Brian, I asked the question about premium and payment frequency being a big issue for customers in microinsurance particularly, and so was really asking how to balance this without focusing entirely on profit. And I think Helen, you answered this a bit in terms of the idea is like you aim to play claims. That's your starting point. But maybe I wanted to bring in Sarita and Lisa and see if you have some thoughts on Brian's question. Sarita,
Thank you,
go ahead.
Daniel. Yeah, sure. I would allow Lisa to add on because she's the actuary, she can add on better. But yeah, from the experience, what we have seen is people do come up with, premium frequencies, such as even asking for weekly. But, it needs to be addressed as per the client segment. We are trying to address the need to. Having said that, our primary approach was to deal with financial institutions who in general would prefer, again, as I said, through financial institutions, we are trying to target the loan clients who have taken small business loans. So some of them might be willing to go for a single premium, which can be a upfront collection of the premium, or maybe an annual or half yearly, but there is no standard formula for it. But we go by the ask of the customer and see how it fits the customer's needs as well as their profile, basically. So we don't fix it for each customer segment, but we try and customize it as and when the customer profile changes. So as of now, we have gone up till a quarterly mode, if I may say, to one of our clients in proposing. But weekly is a little too far cry, because this product is not that short term, or not, the benefits do not come in very short term, and there is a waiting period as well. So we have not gone that far, but we have reached up to a stage of proposing quarterly options. But I would allow Lisa from an actuarial perspective to add for feedback as well. Thank you.
Okay, so I think the question is both on the premium amount as well as the frequency. So on the premium amount, I think what we really work with is large numbers. So when we are able to aggregate the groups and the small businesses with either a partner or through an MFI, then we can be able to be more friendly in our pricing. Another thing is having very minimal margins on both expenses and the profit loadings that we'll be putting on the product compared to a traditional product. So what we are trying to do from our end is to minimize just how much administration we need to do. So minimize both the onboarding bit as well as the claims process. And this really helps us to manage our expenses. So in turn, the product becomes more affordable from that end.
Okay, great. Thank you. And stay. Don't go away. We're gonna have a lot of questions, and rather than jumping on screen, back off screen, it gets a little bit complicated. So I wanted to actually bring back Lisa and Sitara also, if you have some thoughts on this. This was a question from Enrique Chaluco, and he works with a microinsurance company in Mozambique, and he's asking about awareness. And I know from an insurer standpoint, obviously there's a lot that an insurance provider can do on awareness, but as organizations that are focused on sort of really scaling up insurance, not just in one country, but in multiple countries, maybe you have something to share about what you're doing more on the awareness side and getting the message out that, hey, this is a product that's actually useful for financial inclusion. So Lisa, maybe, and then Sitara.
Yeah, I mean, I think our experience with Britain to date is really, the idea is to try and get people to experience insurance. So by putting in covers, bundling in some property insurance covers in with other things that people already know about, and having people experience it, then they get the awareness, and then we can start thinking about, well, how do we think about the other things like moral hazards. So really it's just getting it out there. And I really like that game that Helen showed that AB consultants play in Kenya, that resilient me game, because I think that also gives people a chance to experience insurance before they get it. But I mean, the ILO does a lot of work to try and put out our emerging insights and the papers that we write and the webinars that we present. So, even this is part of the effort to build awareness amongst the providers, and in turn share how they can get the messages out there to the final customers. But maybe Sitara wants to add a few words.
Sure. Thank you, Lisa. I echo, the game is really fascinating. I think it's quite interesting to have, and doing that would be interesting to see what the results are and the different circumstances that the players go through. From SCBF's point of view, we see financial education as critical. And so we actually we've done a lot of funding on financial education campaigns, particularly on index insurance. So in Sudan, Cambodia, Zimbabwe, just to name a few. So I think it's critical for uptake. And I find it interesting that many, oftentimes, one of the lessons learned that comes on our projects is, oh, we should have done more of the, financial education. And so all that to say, you can't do enough. You just can't. So, yeah.
Yes, you'll never get to the point where you say, okay, now we're done with the education. Now we can get right. It'll continue to need support. So maybe I can ask Helen if you can come also rejoin us. And this is a question from Pranav Prashad. And he is talking about the context of owners. And I think this is one of the things mentioned, that in Kenya particularly, you have a lot of renters. Do you have mechanisms to target owners specifically for property insurance?
No, and I will say why. It's because of how that market operates. Like I mentioned earlier, it's a peer market. It is a peer market. And just to echo what Sarita and Lisa said, as long as we are, say, for example, the target market that you just talked about, what we'll do would identify whom they trust. Okay? Because there's something about trust. Would identify whom they trust and would engage them. And then let me hasten to add, we are keen to do the needs analysis. And that's where now the resilient me game comes in. It actually, we discovered it saves us a lot of time. because really it's about them prioritizing. But for the business community, like I said, they will always prioritize their businesses. Okay, that's the first thing. The second thing, just to also add to that discussion, how do we go about it? When we are doing the needs analysis, we've chosen to see things from their point of view. Okay, we are not working with, hey, we have our micro property. We don't even say we have anything. We just seek to establish what are the challenges that you face. Now, one thing we've changed is the language we use. We say there's the market language. A lot of what we have as underwriters are jargons and jargons, premiums, sum assured. What is the other one? If your loss ratio, if risk crystallizes, we change all that. And so just to descend and so that there's order and structure around what we do, we use the word emergencies of life. What happens when there are emergencies of life? What would you be willing to put aside? So we change, so we are appreciating that there's the office language or the underwriter language, and there's the market language. So when we go out there, we use the market language.
Great, thank you, Helen. This is really helpful. I want to keep actually maybe ask Daniel to join as well and stay on the screen, because as since Habitat, those of you might not be familiar with Habitat for Humanity, it's, I would say, one of the foremost NGOs working on housing, and you guys do a lot of work on housing microfinance specifically, and obviously insurance is a part of this. Do you have thoughts about the role of insurance within the context of a homeowner, and how would you reach those?
So, and hence why we actually are supporting this intervention, because and we're talking about the level of assets. So when you talk about a home, it's really a struggle for most of the low-income households to own a house, but then it becomes even more impactful when they lose through different risks. And hence then having a security of that asset is really critical, because then it enables homeowners to focus on other economic activities rather than the losses that may really occur. And hence our work and being flexible, Lisa can actually mention this. You find at times people just think about a house as 4 walls, but then a house is even more than that. You look at some of the innovations we're trying to do, things like insuring some of the small assets within a house, ensuring fire because perhaps someone is using a cooking gas. So you find we see a lot of insurance really supporting a house, not just the property insurance, but a lot of things that are connecting the dots within the house that requires insurance. Yeah, thanks, Daniel.
Yeah, so
Great.
just if I can just
Go ahead,
jump
Lisa.
in.
Go ahead.
So yeah, I mean, I think back to Pranav's question, we when you're looking at a large number of houses in a particular area where people are renting and not owning, and we did go down the road to try and find out like who are the owners and whether there are associations that we could get in touch with and work with. And Sarita can definitely talk more to this, but ultimately you land up speaking to government, and it becomes quite difficult. Hence the thinking that we need to think about property as just broader than the 4 walls. Like it's housing the stock, and the contents insurance part of this is something that is really important to the low income owner. So really, I think it's thinking very broadly about property, beyond the bricks and mortar, which is also important. But in certain instances, when you're dealing with renters, it might not always be possible at this point to get to the ultimate owners. But Sarita, maybe do you want to add to what I've just said?
Yeah, thank you, Lisa, and thanks for bringing that up. As a part of our project, we did explore how to reach out the renters basically, and because we realized the people who own the houses are, I mean, they're not the target segment that we are looking at, right? They are not in the low income segment, but probably the renters who like stay in these places, probably they cannot afford, and if not directly low income, maybe it's an emerging consumer segment that we are looking at. So we did reach out to an association. Again, this market is very scattered. There are not many association or a formal way. As Helen said, it's a peer-to-peer kind of an market. So still we could found one association, and we tried to explore with them if we can work out on reaching out to the renters basically, because it was a property owners and renters association. So we started focusing on the renters association. Unfortunately, we have not come to a conclusion on that, but that is how we tried to explore. And when we talk about these rented places for you being used for businesses, there are a lot of these market buildings or shops which are owned by the counties within Kenya, and probably an approach could be done there to interact with the government and come up with, because the rentals for these shops in these areas that the buildings have been built by the government are owned by the rent is given to the government directly. So probably an interaction with the government there, each county's government there, to protect these shops against this risk, and collecting the premium maybe directly from the shop owners could be a way out. We are still exploring on that. Thank you.
Great. Thank you. There's still a lot of questions. Can I, sorry about this. There was a question from Guy Taylor, and I think he talking about the role of informal providers. And, I don't work a lot in insurance, but in microfinance, you always have the, sorry about this. There's someone at the door and they won't stop ringing. Guys, would you mind answering the Guy Taylor's question? I'll be right back. I'm really sorry.
All right, I'll take over from you, Daniel.
Yes, please.
Don't sort out the doorbell. Okay, so yeah, who would like to have a go at answering Guy's question? Okay, so let me.
I can start. I can start, Lisa.
Thank you, Daniel.
So yeah, and basically just to share from experience that we've gone through within this project, and I'll answer also as part of one of the questions about scaling, and hence we've learned two things. So one, distribution is very critical. I think part of the process is really looking at the right partners to really roll out this product, and hence we are actually involving a lot of being MFIs, being cooperatives, to ensure that we use the base that they have to really scale most of these products, and it becomes easier things like capacity building, because they have already a number of people already that have a particular set of products, and hence we understand in a local context the powers of things like the cooperatives, and we're using different ones that have a lot of customers within their base as partners in terms of the distributing this product. So I thought I'll raise that in terms of partnership and distribution, really understanding and appreciating the role of the chamas and the informal structures that are available in our local context to really try and address these needs in terms of the product rollout and capacity building of these solutions. Yeah.
Great. Thank you all. Sorry about that, but I'm back.
Daniel is back. Okay. Yeah.
I am back. My daughter was at the door, and sometimes you have to let the kids in. But anyway, I wanted to go back, and there was a question on property insurance being embedded, specifically within the context of a savings account. And I was wondering, I don't know if one of you has had experience actually embedding insurance within savings, and I don't know who this question would be. So whoever has seen this in practice, it's not a thing. It doesn't really exist. Okay. Well, if you do have an experience,
Helen has her hand
please
up.
go ahead.
Yeah.
That's a very good question, and I'll say why. The current embedding and bundling we have at APA is on the loans. But as we, during this research, as we are engaging partners, and I also noted someone talking about partners, let's call them channels. One of the things that came out is the need to, how do I put it? The need to treat customers fairly. So there's a need within the MFIs to ensure that benefits can be accessed both by loanees and non-loanees. Now, when you're talking about non-loanees, the non-borrowers, then you're also looking largely at savers only. So there are ongoing discussions to make sure that the product can still be embedded to savers, because you see, in the absence of a loan, the absence of a loan does not disqualify risk. And so what happens is, if fire will happen, it will happen whether you have a loan or you don't have a loan. If you don't have a loan, then you are disadvantaged, yet you are a saver in the same organization. So what's coming out, and we are liking, and it will be part of our scale-up strategy, is including the cover within the customers who are saving, and not just saving. When you get into dealing with MFIs, then you also realize their products are bundled differently, because there are those with fixed, there are those with education, etc. If you allow me, I just want to make one comment, a lesson we've learned at APA, that not all channels will sell the product. So it's important to appreciate, to map products to specific channels. And for micro property, observation is the right channel for it is lenders. Thank you.
Great, thank you, Helen. Thanks for jumping in on this. Sitara, you had some experience on savings as well. So
sure, we haven't seen a lot on savings with property insurance, but we have actually 2 projects that we are currently funding with Vision Fund that is actually savings linked to health insurance, both in Ghana and Malawi. And so I think this is an area that's really important. And we also have one in Jordan, not with Vision Fund, but with MFW. So just to give you some examples, but I think these are examples that could probably be replicated and adopted or modified.
right, great. Yeah, I mean, a lot of this is a question at kind of the very earliest stage of innovation. So it's I'm guessing a few years from now there'll be a lot more experience on what's possible in terms of bundling insurance with savings. Lisa, you have your hand up.
Yeah, so I just wanted to chip in. I know we're running, like we've got 2 minutes left, but there was a project that we were working with in Peru, and one of our emerging insights was a company that had a property insurance linked to a loan, but that you could keep that insurance going after the loan had been repaid. And I'm busy digging into this because I think this is very, very interesting, because I think if people can keep their cover beyond the loan period, I mean, this is one of the big problems of loan-linked insurance. I think that continuity is really important. So it does appear that there are a couple of examples, excuse me, out there of insurers thinking about how they can keep going even beyond the loan period. Just to say, thanks, Daniel.
Absolutely, thank you. Maybe we have time for one more question, and this is kind of a big question, and general. This is from John Robert. How do you achieve scale in micro property insurance? I think any of you have thoughts. Helen, APA is as big an insurer as you get. What are your thoughts on how do you scale this up to reaching hundreds of thousands or millions of customers?
Thank you very much, Daniel. Part of the things we are doing, I want to highlight 3 big things. The first one is something we are saying you must organize for innovation or to scale. You must be intentional about it. And act on purpose. The second thing is aligned partnerships. They will save you time. The 3 challenges that I highlighted, partnerships will save you time. But let me put a disclaimer: aligned partnerships. aligned partnerships. Then lastly is customer centricity. And this I will keep emphasizing. You must wear the lenses of the customer. You must see what they see, feel what they feel, get their perspective. And my favorite one, design to pay. You must design to pay, because what we want is testimonies, okay? We want as many people as possible to say, I'm a beneficiary. So let's have a reason to pay. I think that's what I'm saying. And we are hoping that what we have in place, what we are working on, will give us the scale. I think working with SBF will give us the scale that we are looking at. The numbers are aggressive, but we know claims is the testimony. And number two, we want as many people as possible to see their beneficiaries. Thank you.
Great. Helen, I couldn't come up with a better note to close this on, actually. So we're 1 minute over. I think we've covered as much ground as one can in 90 minutes. I've seen a lot of comments, people who want to connect, want to get in touch. Maybe Lisa, just a quick note is if those who are interested in learning more, who should they contact and how?
They can reach out to me. I mean, I see John has already given his email address. So yeah, in the chat, I'm going to leave my email address. So if you just hang on a second, you will see it. So yeah, I mean, just get in touch and we can take it from there.
All right. All right. Well, thanks to all of you. This has been fantastic. I hope you have enjoyed this hour and a half as much as I have. And my apologies for the interruptions, but I look forward to learning a lot more about micro property insurance, a year or two from now, and seeing where things are.